So to make a long story short, I will briefly introduce myself, how I became entrepreneur and how I get interested into the blockchain area, which will lead me to introduce the other speakers. So in the first 50 minutes, we are going to present everyone's project and everyone view on the blockchain area and what they're building now. And in the second part, we're going to discuss the fundraising future. Especially, we're going to exchange about the different technical and regulation issues that makes fundraising a whole new world, something that is at the start of a big revolution, thanks to this amazing entrepreneurs that we gathered today, and the whole community of blockchain that is building some amazing tools that are transforming the future of this industry of fundraising. So from myself, I come from an IT and investment background. After many years in large companies, I had some kind of thirst to give meaning to my life, and that's how I landed on a book from Jeremy Rifkin, who has written the third industrial revolution, which is about the collaborative revolution. And it led me to create some startups in this field. Never before in human history, it was possible to organize ourselves in such a complex way that we can do now, thanks to the new tools that we are going to talk also this evening. I started IT Unchained. IT Unchained is a IT freelancers platform which aims to be collaborative and which aims to be able to give back to the community of IT freelancers some part of the governance and some part of the value that is created on our platform. So that the idea is that we build a community thanks to this incentive in the form of tokens, and which will help us to push the community in one direction and to do some action and with coordination between us. What I wanted to say there is that I understood that the blockchain is a fantastic tool to bring trust into communities, and thanks to this technology, you can invent some new kind of organization, and that's how I discovered the decentralized autonomous organization, so the DAO, and that's how I met Philippe, one of the speakers here, who will further describe the DAO, and who will also co-animate the conference for the rest of the evening. So Philippe is one of the French specialists, or even I might say one of the world specialists of the DAO, and he has a very deep understanding and knowledge of the different communities that are building the future of work and the future of the organizations, thanks to this DAO. I met also Joris, thanks to his project Fermint. So the project Fermint that he will further introduce is all about creating some tokens that reflect the value that is created by the company in in a new way. So it gives some new tools to raise funds and to share the value, thanks to a new regulation object, a new regulated object that is the token from Fermin, and he will talk more about this in later on. Then I met also the great project of Haran. So the Lao. The Lao is a DAO that is gathering some investors and invest together through DAO, so that they have find how to solve the regulation issue raised by the fact that to invest in some startups and through a token. So I will let Haran more detail his views on the point, and how investing through a DAO is interesting for investors and also for startups funders who can raise funds thanks to this community. And finally, Thibaut is a lawyer, and he's been involved in many ICOs and IEOs, and now is also building some project around the STO. So sorry for all these terms that might looks a bit geeky for some of you, but this is the terms that were used to raise funds through ICO. So it means initial coin offering. That's how Bitcoin, Ethereum, and so many other blockchain raised billions some years ago. And and it slowly evolved to STO. So now STO is more like a security token offering, which is the latest evolution of the ecosystem. And Thibaut will explain us what are the different, what is it doing, and how it's all these tools are regulated, how to use it if you want to raise funds for your startups. So I propose to Philippe to continue the presentation of himself, and maybe to talk just a little bit about the DAO landscapes.
Well, thank you for your kind words. I'm definitely not a specialist compared to Aaron here. So if there's someone who can talk about DAOs, just a few words. I'm an entrepreneur and a commoner, what is called a commoner. So I'm supporting the commons, and I have background in technology and human factors. I've been an entrepreneur for a long time now. I've been involved in the crypto space since 2015. When I started to collaborate with a project called Backfeed, that later on became DAO Stack. And I've been working with a number of projects that have one thing in common. They are based on some level of decentralization, some level of shared decision-making process. So not the typical startup where most of the time the power is very concentrated, as you know. Recently, I've been working on one particular project, which is a blockchain-based financial instrument that is designed to align the interest of the different stakeholders of a project, so especially the founders and the investors and the workers. I'm interested in workers' organization. I'm a co-founder of Gilder, which is a collaborative platform for representative of staff, so people who represent employees in negotiation instances with companies. And as you said, Benoit, I'm particularly interested in DAOs. So I run a blog called orgtech.fr, and I'm a founding member of orgtech.com, which is now DAO-based, and which is a media organization dedicated to DAOs and to blockchain-based governance in general.
My name is Aaron Wright. I'm a professor at Cardozo Law School in New York. Have a background in law and technology. Played a small role helping to launch Ethereum, which is one of the major blockchain platforms where lots of this interesting activity occurs. I've also co-founded a project called Open Law, which basically bridges together traditional legal agreements with the blockchain world. And one of the first applications that we built on top of Open Law is a project called the LAO. So folks that have paid attention to blockchain technology may remember an organization called the DAO, which stood for a decentralized autonomous organization. It launched about a year or so after Ethereum launched, and it was spectacular. It raised over $50 million worth of Ether at the time. Given the appreciation in Ether today, that would be hundreds of millions of dollars, if not slightly more than that. And the concept was pretty simple, which is that the way companies are financed today is pretty broken when you look at it from a global perspective. Particularly if you're in the US, you have to go to one region of the country, Silicon Valley. You have to go up and down Sand Hill Road and try to raise capital. And you need to basically ask for permission from these small venture capital funds in order to build a project or hopefully push things forward. The vision of Ethereum in part off the bat was to really open that up, to democratize access to all sorts of capital, including venture capital. And the DAO was the first example of that. Unfortunately, the DAO ran into both technical issues and regulatory issues. So first it hit some technical issues and it kind of got robbed in a sophisticated heist, of which there's a new book by Matt Lessig of Bloomberg that's going to purportedly shed some more light on that. And also there was regulatory issues that were raised about how the DAO was structured after it kind of blew up. And with the LAO, we figured out a path, at least in the US, in which we can kind of reboot the DAO itself and begin to pool capital from various different folks that are able to pool capital. In the US, that's called an accredited investor, and start to make investments in a very open and democratic way. And we're also working on a whole bunch of different structures that we think will chart a path towards enabling anybody to do the same thing. So that's kind of the long-term arc for it. We launched about 6 weeks ago. It has a little over $1 million worth of assets in it already. And we've already made 2 investments. So things are moving pretty quickly there. I think what's really interesting is it's a venture capital or venture capital-like approach, but all done through a network and through a crowd. So we're able to identify projects that folks are interested in investing in, crowdsource the way that information is collected about those projects so we can learn more about the team, and also vote democratically and asynchronously so that investment decisions can be made. And that's pretty cool. Later this week, you'll learn that we're setting up another DAO for a project, which will enable that project, instead of going out and trying to raise capital from venture capitalists, they'll be able to effectively set up a fund for themselves off the bat so that they can raise capital and begin and chart a path towards a fully decentralized protocol. So that's something that we're really interested in. We're also working on different structures that would enable folks to not only invest in projects, but also to participate and provide liquidity to various different blockchain-based projects in order to earn or farm or mine. The language is not particularly clear yet on what that's going to look like in various different decentralized finance protocols. So lots of interesting things, and happy to unpack that more.
Yes, hello everyone. My name is Thibaut Verbiest, and I'm a lawyer specializing in technology for about 26 years. So my focus is interactions between law, regulations, and new technologies. Started with the internet 25 years ago. And I've been involved in the blockchain space for about 5-6 years now. I am also the co-founder of a couple of blockchain projects. One is copyrightcoins.com, and it's a project. It's actually a blockchain-based copyright management system. and where the artists that we represent through the platform are being paid in real time, almost real time, in copyright coins, so in our own cryptocurrency, by the so-called DSPs, digital service providers like Spotify, YouTube, Facebook, and so it's actually a stable coin, because when the artists receive the copyright coins, those copyright coins have been bought by Spotify in the first place. And so the fiat funds that are being paid by Spotify to buy the copyright coins are put in an escrow account with a banking partner, which is today a Swiss bank. And so when the artist receives the copyright coins in its wallet, it can convert the copyright coins at any time by just notifying its intention to receive the fiat funds to a foundation, which is set up today in Estonia, and it will act as a central bank of the copyright coins. So today it's working for music. We have started for music, but the system is also relevant for any cultural content, digital content. So the next move will be cinema, and after probably online press. I also co-founded a foundation in Brussels, which is called YOUR, for Internet of Universal Resources. It's based on a book that we are now writing and will be released probably in September and October, and where we are trying to design a new protocol for the Internet, which is much more open. And the basic principle is that all the universal resources that we call universal resources or services, like search engine, for instance, or just storage capacity, computing power, and with a protocol which is based on the principles of a blockchain, distributed protocol, can be offered in a distributed manner. So let's take a search engine, for instance. The dominance of Google is primarily based on its search engine, expanded afterwards on different domains, but it started with the search engine. It's a top-down approach of a search engine. And but if you offer the search engine capacity to the protocol itself, lower layers of the internet, the search engine becomes universal and much more efficient, because every content which is proposed online, publicly online, is automatically, unless the content owner doesn't want to share it, but is pushed to a decentralized network. And so you have a real-time updating of the search engine, and also an automatic archiving of every content. And plus the fact that confidentiality, etc., is also offered through the protocol itself, you have a completely new internet. It's, technically speaking, I'm trying to make it very simple. But so we have set up just a foundation to promote that protocol. And we're gonna also, and we are assembling a team of IP and patent attorneys to actually patent certain elements of the protocol, but to open source them immediately, so that no one can actually privatize that new protocol. That's in a nutshell. And of course, just to relating to the subject, today's subject, as a lawyer, I've been involved in a number of ICOs and SDOs.
Okay, so Joris?
Yes. Hi, everyone. Can you hear me well?
Yes.
Okay, great. So I'm Joris Delanoux. I'm an entrepreneur since more than 10 years now. I've been building IT companies. And after my last exit in 2016, I joined the Singularity University in Mountain View with one goal, like trying to crack what was the pain for all the founders, including me, and also some pain for most of the angels investors, like the illiquidity of all their portfolio. And after working on building an exchange for startups using SPVs to not touch the cap table. That's when, with my co-founder, Thibaut Favre, who we authored the continuous organization white paper in October 2018. That was post ICO era, and based on the work of the continuous organization and how we could use crypto primitive to reinvent the capital formation for companies. We also consider that lots of people were waiting for an access to the upside of all the companies that got built over the last 10 years. And that's very frustrating for most of them to see that equity is not the right tool to do that. So basically, we've been building Fairmint with all those data points to try to find a way for decentralizing the access to the wealth and counteract inequalities this way. We clearly are in this move of the stakeholder-centric capitalism, and we strongly believe that Fairmint today will become ubiquitous by offering the opportunity and the ability to any company, including non-crypto companies, to turn their stakeholders into investors and to raise funds and get financing through this way. So that's basically what we are doing at Fairmint, giving this opportunity a complete frictionless experience for investors and also for the issuer, the company, using our platform directly. And they can, it end with an invest now button directly on their website, which is like the smoothest way to acquire and purchase a security today. Happy to discuss more about that with the question of Phil.
Yeah, so we prepared a set of topics for the discussion to come, which is about the future of fundraising. So the first topic is about new objects that have been discussed on, notably the forum of the Lao. So we've been discussing about the SAFG, which is a simple agreement for future governance. So meaning that investors would put some money on some company that where the governance is not set yet. Can you talk a bit more about this idea, maybe Aaron or Philippe? Or...
Sure.
Yeah.
Yeah, I could dive in. So this is kind of a new token approach that certain projects are taking. I don't know if there's a project called Compound, which is a large decentralized finance project. They just released a comp token. The token only entitles holders to the right to participate in future governance decisions related to the protocol. So certain decisions about how the software should operate, certain key variables that are necessary for the software to operate, folks can weigh in on, and also future improvements and enhancements. And lots of folks are interested in this model because they really want to build open source technology, technology that's not managed by one centralized entity, but a whole community. So I think instinctively there's an interest in having people share in some of those governance decisions to make that more democratic, to make that more streamlined. At the same time, there's now going to be even more interest in this model because the Compound token was launched last week, and it's trading on a fully diluted basis at roughly $2 billion. So it seems like individuals are very interested in either purchasing or acquiring or having some sort of seat at the table, at least when it comes to some of the larger DeFi protocols like Compound. The reason why it's appealing potentially from a regulatory perspective is that the token itself has no real promise of profit. It really only entitles its holder to some sort of decision, voting decision in some capacity, at least from a US regulatory perspective. Whether or not just providing somebody with governance rights will make something a security, the answer appears to be no. At the same time, the token is only being distributed, at least initially, to the users of Compound. So people basically have to stake other digital assets and they'll get back comp as a reward. So that also feels like something that would create less regulatory concern, at least in the US. There's a line of cases that indicate that if you're acquiring something to use it in some sort of way and are actually using it, that makes it less likely to be a security. At the same time, there was obviously lots of different folks that supported Compound or Compound Inc., the software company behind Compound, up until this point in time. We'll see what it means from their vantage point in terms of whether or not, A, they receive tokens, and whether or not those tokens will be tradable at some point in time. My understanding is, and this hasn't been verified, that's why I qualified the language, that investors will receive some allocation of comp tokens, and those tokens will not be freely tradable at any point in the future. But since Compound launched, we've already seen some other decentralized protocols follow a similar path, including one called Balancer. And I think that there's much stronger arguments here, at least from a policy perspective, that this may be the right approach going forward. You have actual live projects that are trying to basically build an open source protocol that they do not control. So they need to distribute some of the governance related decisions. There's an actual need for it. It's only being distributed to users, and those users are basically able to get a seat at the table. Whether or not that goes up in value in all instances, I think the answer is it probably won't, but it may in some for some of the larger projects, and that means that early users, early adopters, folks that really helped grow out these networks will be rewarded. But at the same time, investors and other folks won't be able to just engage in various unsavory activity like pump and dump schemes or lots of the other things that I think many of us in the blockchain space were not completely happy about during the ICO boom. So super interesting. Still lots of gray area questions, but I think that there's some fairly strong arguments, and frankly, much stronger arguments than what many of the folks in the ICO space were attempting to make, and then ultimately lost, at least in the US, when it came to characterizing those types of tokens. And I think it's something to definitely watch. I know on the Lao side, the members are very interested in this model. In part, we're also looking to build new structures to enable folks to earn these tokens if they want to deploy capital to some of these decentralized protocols.
If you want to interact more in between you, or if you want to launch the discussion in one direction, Joris, Thibault, Philippe, or Aaron, please do so.
Sure. I saw we have a question. Should we answer that before we move on? The question was, what's the main benefit goal of using blockchain in fundraising for investors and entrepreneurs? Maybe, because I think it's actually may provide a high level update. I think that, one of the main advantages to blockchain technology is that it basically turns money into an informational good. So we saw with the internet that we were able to turn messages or other packets of information and move them around the globe at the speed of light, effectively. And the power of that was dramatic, right? Entire industries reorganized. The way that we engage in commerce is rapidly changing. The way media companies are constructed and information disseminated, all radically altered. Now we effectively have the same ability to do that with things of value, so money. So we can basically turn money into something that doesn't transfer as fast as email yet, but almost as fast as email. And we can break it apart into really small pieces, micro payments or other forms of small payments, and also pool together money really, really fast. So for entrepreneurs that are engaged in an oftentimes cumbersome process of fundraising, which if you haven't gone through it, in the traditional US style venture capital financing, it takes months, at least 3 to 4 months of fundraising for your first round, lots of meetings, lots of rejection, and frankly, the venture capital funds don't always get it right. So they don't have 100% hit rate in terms of backing new technology. And we know that in particular in the blockchain space, because the two most valuable networks effectively had no venture capital support off the bat. So Bitcoin and Ethereum were not backed by elite, Silicon Valley or Silicon Valley style venture capital funds. They were backed by folks that wanted to use it. So the possibility with blockchain technology is being able to pool capital fast to raise funding that you need to develop your project. And I'm sure Joris can weigh in here, but it's also non-dilutive financing potentially. So what that means as an entrepreneur is that you're not going to lose control of your company as that company grows. And that's kind of the deal with the devil that you do right now with venture capitalists. You take on money and they ultimately take over your company. And so you lose control of the direction of your business after a couple rounds of financing. With blockchain technology and some of the different token models and crypto economic systems that have been thought about and or developed, that possibility goes away. And I guess the last benefit would be to the extent that tokens are not considered securities, and I'm sure Thibault and others can weigh in on this, and this is a very vexing question, and Joris obviously touched on this before, the fact that these tokens may be freely tradable, i.e. liquid, is a huge advantage. Lots of the value that young companies generate is illiquid. It can't be accessed except in limited instances, i.e. a company has to go public or a company has to be acquired. And there's some downsides to that, not only in terms of making sure that people can see returns on their investments, but it also creates some odd incentives. Like these large tech companies just buy other tech companies because that's the only way that the investors can get liquidity. So it doesn't necessarily achieve the purposes that I think everybody wants to achieve. That is the current system, and potentially blockchain technology or some of these token-based models, to the extent that the tokens cannot be considered securities, can be a win for entrepreneurs, it can be a win for investors, and it can be a win for early users of the technology. So it actually creates incentives for people to use this new technology, which hopefully will push society in a positive direction. That's my riff. I don't know if you guys have anything to add there.
Yeah, I just have a comment, actually, more than a question. It's actually funny that where you were mentioning compound, you were mentioning a token model with government rights, but no expectation of profit, if I got that well. So
Right.
got that right. And if I think about the Fermi model, so that maybe Joyce would be able to explain in a bit more detail, it's quite the opposite, actually. It's the idea of having tokens with no governance right and an expectation of profit. So it's actually, my comment is this to add, one argument or one element on top of everything you said, Aaron, is that what the blockchain brings to the table is actually the fact that you have much more flexible model for financing, for equity. And there's this general idea of programmable money. And here we're kind of approaching a programmable equity as well. So we could have a new model of governance, new type of rights, or new type of revenue flow that were actually completely inconceivable in the traditional model.
Yeah, I think that's completely true. Real-time dividends, different ways to do rev shares, different ways to do financings. So I think like all technology right now, we're kind of in the blockchain 1.0 era where we're kind of replicating and making smaller riffs on what we see today. And over time, I think like you mentioned, Felipe, we'll start to see different things. But governance rights in and of themselves are interesting, right? The fact that with a token, with blockchain technology, you can uncouple individual rights so seamlessly is really interesting. And there's some studies that indicate that, for a traditional stock, which has both governance and economic rights, the governance rights tend to equate to about 25% of the stock's value. You can think about that if you are, let's say, a hedge fund of some sort or an activist private equity fund, you're basically acquiring that stock, not necessarily for the cash flow or some sort of return. You want it so that you can effectuate some governance change. So governance has value. Whether or not governance in and of itself will raise the same regulatory issues, time will tell. I think we'll see that. Well, hopefully answers around that.
I would like to bounce back on what you said, Aaron, about ICOs, because you mainly focused on ICOs when you responded to the question of the gentleman about the benefits of fundraising through blockchain. You talked about ICOs, and but also there are downsides in ICOs, and it's a strange animal. ICOs are strange animals in terms of regulation and also economics. Regulation, because today it remains a very messy situation, because you have zones where the assessment of what utility token is, because when we are talking about ICOs, we're referring to utility token, meaning that's what you explained. That's a token that doesn't represent a financial instrument in the first place as such, and but in certain countries, like in the United States, there's a strong drive to interpret those tokens as securities, but we don't have the same interpretation or inclination to interpret utility tokens in the same way in Europe. At least most countries in Europe, including the European institutions, said that an actual utility token is not a security. So so you have that messy situation where the same operation, exactly the same fundraising operation through an ICO, can be treated differently according to the different legal zones, United States, Europe, or China, etc. So it doesn't make the life of an ICO issuer easy, but that's also a strange animal in economic terms, because in many ICOs, what are you selling? You are selling the possibility to pre-purchase a future service through the token, and it's not necessarily something which actually fits into an actual investment. So if your intention as a buyer is to make a financial upside, and you are not really interested in buying the future service, you might end up in a kind of economic paradox. Legally speaking, it's a question, but so economic speaking is a question. Why are you buying tokens, utility tokens? To use a service or to make an investment? Because it's for making an investment. So why an utility token? There is that paradox when we are, and that's why many investors decided to move to something which was more like they were used to do in terms of investment. That's why we are moving to STOs, but STOs are not also today showing the excitement that we expected. Maybe we can explain why. It's also, part of the debate, STOs.
Yeah, I'd like to add something here, because we've been talking about tokens and STOs and ICOs, and I'm afraid that we might lose some of the people in the audience that are actually interested by new ways to fund their startups, which is the title or the teaser for this panel. So I'd like to actually get some feedback from each of you regarding the way traditional startups could actually benefit from this new ways of raising funds. I understand that we've been talking about DAOs or LAOs or new mechanism and ICOs, new mechanism to fundraise, but most of the time it has been a way to raise funds to crypto projects. Whether that project were a blockchains or a decentralized application or DAOs themselves. And my question is, how do you see this mechanism to be used for traditional startups or projects that are not necessarily startup, but are not that close to the crypto world? Do you think it's something that can be done in 2020? Or do you think that is something that is still very futuristic and that we won't see before a number of years? Yeah, so that would be a question for everyone here.
I can answer to that, Phil. Well, at Fermin, the way we believe in crypto, or maybe more blockchain, it's like we see it as a real tool that can enable any company tomorrow to turn their customers, all their stakeholders into investor. And we see it as a part of the stack of what we know today to fundraise. Like you need to be an issuer. Okay, so you need a platform to issue. You need to comply with the regulation. So basically that means KYC, KYB, AML process as well. And all those are typically the kind of stack that we don't see, or we didn't see in the ICO process. We probably see it in the STO platform right now. But what is for sure is that today we are working on making the blockchain accessible to anyone without even seeing it. Just like the cloud computing was 10 or 12 years ago. And as soon as you start to see the blockchain this way, you don't go into the crypto, you don't go into all the altcoin, all this value that is created with lots of debate around it. No, we just go straight to what is the value of a company today, how we can use this value to leverage it and to have anyone able to finance it. And by anyone, I mean also non-accredited investor, because in a way, today we have some paths, maybe after some restriction, that allow us to access non-accredited investor as well. But the key here is really like how we can design today a tool that will give a smoothless experience for anyone to invest, and not just people that already know how to use MetaMask, for example. And all the founders that we keep seeing and meeting at Fermin since now 2 years, we interviewed them to get as many data points as we can. And when we started to work, what was key was that the founders, most of the time, they want to keep the control. So that's what Heron was saying about the non-dilution. So either they accept dilution one time, and then it's clear they know exactly what they got diluted, and that's it. Or maybe they can find a way through their revenue, for example, to not have any dilution on their governance, or even by putting a preferred share with no governance at all to raise funds. So that was the first data point. The second people that we were talking to are investors. And by investor, we see the sophisticated investors, the professional investors. And obviously, when you start to talk to angels, most of the time, they don't really care about governance. They are looking for the upside. And they are looking for what we call the liquidity, which is basically the best way for them to get access to more and more companies, but also to have the opportunity to step out when they need or when they want. And the funny thing is that talking to institutional investor, we heard from them at the beginning that governance was like really key for them when they invest. But as soon as you start to give them some ideas of liquidity, we start to see that VCs are interested in it. Like hedge fund would be looking for this type of tool, but for VCs right now, most of the time they invest with a projection of 7-8 years on equity. And when we start to talk to them about liquidity, we immediately see that they are attracted by dropping the governance to get more liquidity. And the last people we are talking to since 2 years now, basically it's the stakeholders. Like any ride we were doing during 18 months, we were discussing with the drivers, Uber or Lyft or whatever, Airbnb host, gig economy at Deliveroo. When we were receiving any meal, we were discussing. And the funny thing is that they are looking for the upside as well. But the first stuff that they mention is that they don't have the access. And what is probably key today is that we have this capitalism where it's a shareholder capitalism, where basically only insiders get access to. And if you know the founders at the beginning, or if you are wealthy enough, or if you are a professional investor, then you get access. But all the rest of the people that will create the value of those companies that we see since 10, 15 years, well, they don't get the money. They don't get anything. They are providing their service. They receive something in counterpart, but the financial upside is never for them. So the key today is really like in 2020, how can we provide this tool that will allow anyone to access? And that's what we've been building since 18 months now, because we strongly believe that probably equity is not the right tool for that. Equity bear governance, equity bear lots of paper, it bear lawyers, it bear all the issues that you get when you are on a cap table. So if we have something that is more liquid, something that is easier to transfer, easier to issue, which is basically what the blockchain allows today, then you can start to let anyone raise funds through a novel way. And so I see blockchain as a real enabler for founders to raise funds, and for investors, and by investor I mean also stakeholders, to get an access to the upside, the financial upside of the companies. And we can do it in 2020.
Thank you for finally answering the question.
Yeah, well, I think the answer is technically we can, projects could use blockchain technology for fundraising purposes. The issue is not really a technical issue; it's a regulatory issue. And as Thibault just mentioned, there's different approaches to how certain assets on Ethereum and other blockchains will be characterized as. So I think for right now, some of the things that we're describing are going to be most useful for blockchain technology companies that intend ultimately to build decentralized blockchain-based open source technology, kind of core infrastructure in this ecosystem. Sorry, Joris, that's my opinion. I don't know if that was a reaction.
I like it. Since you start to talk today, it's music to my ear. So I love all
okay.
that.
Fair enough. So I think that's really where it starts. But the one thing that's interesting about blockchain technology is that it's a flywheel, right? So what we've seen was Bitcoin kind of spun off Ethereum in a certain way. Ethereum was a generalization of Bitcoin. And then Ethereum was launched and generalized the creation of assets. And now we're seeing really robust and mature market infrastructure emerge. And the way things are going is that this infrastructure is not going to be owned by one centralized company. It's going to be open source technology that's managed by a community. And that's the intent. The structuring related to how people should fund and distribute the ownership interests in these open global networks is still not clear. And it's not clear because the technologists haven't figured it out. It's not clear because the bureaucrats haven't figured it out. And they haven't come up with a unified approach for it. So after the ICO boom, we saw lots of folks interested in STOs, which was great. Unfortunately, our public markets work pretty well, at least in Europe and in the US, and obviously in parts of Asia as well. There's not a huge efficiencies that are gained by turning things into securities. I think ultimately, when this will be used by lots of different people, it's when we get clarification that having some sort of interest in an open, decentralized blockchain-based network, presumably that you participate in some sort of way, help bootstrap and help grow, will not be considered a security. And when that happens, it will be used more pervasively and outside of the blockchain technology ecosystem. This is not a tech question, right? Joris, the stuff that Fairmint has done is amazing. The stuff that DAOstack has done is amazing. The tech's all there. It's the crummy lawyers, no offense, Thibault, and I'm one too, that are slowing this down. And I think it's a shame, right? I think it's a shame because we really do have the opportunity to basically build a global Silicon Valley, where it doesn't matter if you're in France or in the US or in Russia or in Africa or India or China. If you have a great idea and you've got people that want to back you, you can quickly raise capital and move on with your day. Why should the number one job of a CEO of a company be fundraising? If you've got a product that everybody loves, there's no real reason for that.
I think what is wrong also in the fundraising process today is that it's campaign based, and the fact that you need to raise during a specific period of time, it's also the result of the use of equity, because it's lots of friction. As soon as you touch equity, you have all this friction. You need to do lots of paper. You need to call your lawyer. and you don't want to do that all the time. But at Fairmint, we created what is called the continuous securities offering. So first of all, we don't try to change the securities law. We just fit inside it, and that's probably one of the key also. Like, the framework is pretty clear. So as soon as you respect it, you just design all that you need to do based on these securities laws. And if you comply with that, what's the matter? I mean, if you are a normal company today and you decide to raise funds, you don't try to do anything that is out of the equity and normal securities law. So why, by using blockchain, would we try to do that? Maybe in 30 years, okay. But look, it's 50 years that we try to have a worldwide tax system. It will never happen. We understand that. So how will it change on the securities as well? It's probably a kind of utopia. So when we started to work, the basis of Fairmint was the continuous organization white paper, which is clearly a shot for 2050. What can be an organization at that time with this kind of governance that is really clear, and the value is like participatory capital, and on the other side, a specific a tool that is designed for the upside. Okay, then that's fine. But we are in 2020, and we need to build and we need to bridge what can be done with the tech and what exists with the current legal framework. And I agree with you, Aaron, on the fact that probably it's hard right now to do an international fundraising. Okay, but it's mostly hard because the SEC has very specific rules, and because the US have this accreditation mechanism that make some kind of friction, and that imply for anyone willing to issue to be really careful on all that you are doing. But as soon as you start to build on that, what prevents you to raise today? I would say nothing, because right now we can see some real estate from the US that are sold right now through the blockchain to lots of non-accredited investors in France, in Germany, in Europe, because there is no accreditation there. So probably in the US they would never have been able to do it, but right now they are buying tokens that are basically pointing to all these apartments in big towns in the US. So that means that what does that mean? That means that right now we have companies that are able to raise money in the current framework. And what is probably key today is more like, how do we try to fit in? How do we try to accept the idea that it's securities? And in the blockchain maximalist, we hear that decentralization is not the key, but permission is the fact that it's permissionless is the key. Well, yeah, but if being permissionless means that you are committing a fraud, that means that you will have some issues after a while. So most of the businesses and founders won't follow this path. So the question now is more like, how can we bring all those people that wants to have legit business, that wants to sleep without wondering if tomorrow they will go to jail? And that's when we started Fairmint. I remember we have kids with Thibaut, and the first stuff that we said to our lawyer was clearly like, we don't want to go to jail. We want to sleep well at night. So we want to know exactly what the framework is, and based on that, we will build. And that's what we've been doing, and we are really clear on that right now. And all the companies that we are now onboarding on Fairmint, providing them all the tech, providing them the opportunity to raise continuously with a simple Invest Now button on their website, is the opportunity for them to access investor all over the world. So maybe non-accredited investor in the US won't be able to invest. Okay, but it still allows probably 4 billion of people to invest, and that means a lot. And if tomorrow we can counteract inequalities by decentralizing this access to the future upside of companies, I think we will be super proud of it.
Yeah, I'm definitely with you in spirit. I mean, the only slight point that I would note there is, just because you're selling something from the US to folks in another country doesn't mean that it's lawful in those other countries. And roughly, and there was a question about this in the chat, So the securities laws around the globe are not unified. It's not like intellectual property or tax, right? Intellectual property is probably the most standardized and increasingly standardized. But it's largely follows the same principles, right? At least, and when I say that, I mean in the U.S. and Europe and parts of Asia. I think that the big headline here is there's a lot of regulatory challenges and a lot of risk, and I think that's why you're seeing a huge push from the US to just change the conversation, right? To create something that is not a security, just because there's so much friction, there's so many details that need to be worked out. Really boring things like custodying these tokens. What does it mean? Who's going to be responsible for it? There's just a whole apparatus that is beautiful at some level today that enables our pretty efficient capital markets. We just know on the tech side now, and since we're in the weeds, that it can be 10x more efficient if we begin to remove some of the legal impediments. So the question is like, how do you go from here to there? I think we're getting closer. I'm pretty heartened by the compound stuff. It doesn't offend me the same way that a lot of the ICO stuff offended me. And I thought that it would run into lots of regulatory problems. I think that this has a decent shot. I think we may get there. And then I think to your point, Joris, then it's not about anything, right? It's a commodity that's being basically freely traded. The rules around commodity trading is much lower in most countries. Again, not unified, but much lower. And we can begin to kind of build that out and get some of the benefits that you aptly and eloquently just described.
Just Aaron, I don't think that the collapse of the ICO market is due to regulatory questions in Europe. I mean in Europe, not in the United States. In the United States, it's very different. The SEC has not been the best friend of the ICO market. Everybody knows it. And that's a big concern in the United States. It's not the same in Europe. In Europe, as we said, most countries, I think all countries actually, all countries saw ICOs, real utility tokens, as not being securities. So it wasn't the issue. The issue is what happened to the market. And that's why most people lost confidence in the ICOs. Now for STOs, indeed, in Europe, like in the United States, we have a very big regulatory hurdle, which is not about the primary, market. The issuance of security tokens is not really an issue. Like if you look at the few guidances issued by national European regulators like IMF in France, they explain all the possible obstacles for STOs in France. Not many, and very few, and minor. But the problem, and that's why STOs are not taking off in Europe, like in the United States, by the way, but it's even more in Europe, is the total absence or lack of regulated secondary market. And that's the only reason, because when you talk to investors in STOs, the first question they ask, because most of them are, let's say, sophisticated investors today. That's how the market is for STOs. The first question they ask is, okay, are you liquid? When can I resell my tokens on a secondary market? That's the first question. The other questions are completely secondary. Is it more efficient? Is it less costly? What about the automated governance? That's secondary questions. The first question is what they call the liquidity premium. And they assume that once it's going to be listed on compatible stock exchange, they will benefit from a liquidity premium. But then we are stuck for regulatory concerns, because in Europe, as you probably know, if you want to be regulated as a trading venue for security tokens, which are securities, you need to go through a CSD, a clearinghouse, like Euroclear or Clearstream, and that's, we are not there yet. So it's stuck because of that. But to be optimistic, and I'm not a DeFi expert, but I have a very strong confidence in tokenization of non-liquid assets. Not most people think of real estate, and I'm not sure it's a good example of real estate because actually it's a very conservative way to tokenize something. Real estate, very conservative way, and you can make liquid real estate in many ways, like REIT in the United States. Not very new. It's not very new to make real estate liquid. It's not very new. And but what's completely new and innovative is tokenization of other non-liquid assets like IP, like gold and commodities, and there are more and more projects getting into the space, and that's what we do with copyright coins actually, because beyond paying the artist in real time with a cryptocurrency, because we're using blockchain, all the artists register their work on the blockchain. Afterwards, you can crowd fund your future works by selling shares in your work. That's what we call copyright shares, and you tokenize actually IP or future content, and that's extremely interesting for artists. This crowdfunding actually, but of IP, and you have also, and that's also interesting for commodities like gold or silver, where I am involved in a project in Africa, Ubuntu, where you actually give access to a very large community of buyers of gold who otherwise would never buy gold because it's too expensive. Because actually, when you want to buy gold, actually, what most people do, you need to be sophisticated investors, large amounts, and most of the time, what you do is you have a claim on the bank or an intermediary that sells you gold, but you do not actually own the gold. You have a claim on someone that is supposed to own the gold, probably doesn't. That's exactly what the gold market is today. Claim. You do not own the gold itself. But when you tokenize it, you can create transparency, traceability on the gold supply, and actually own it through a tokenized certificate of gold. Okay.
Joris, how do you say, in regard of what I've been saying, Thibaut, how would you qualify the Fermin token? Is it a security token? Can it be used as a utility token, or how is it accepted by the French and the European regulation, and what is different with the US regulation for according to you?
Well,
and for in the idea that a small business would implement this solution to raise funds?
Well, we evangelize the idea of the continuous securities offering. So by definition, we are dealing with securities. The funny thing is that in some countries, like France, for example, 2 years ago or 1 year ago, they vote for a law that is called the Loi Pacte, the token law. And the funny thing is that in France, the AMF has a very clear definition of what is security. And to be a security, you need to be that, or that. If you are not one of these four, you are not a security, then you are a token. And so what does that mean? That means that basically you can consider that it's a token, which makes the France has really cool regulation and jurisdiction for that. But does that mean that we want to do anything with that? That we want to have this vet from the AMF, the French SEC? No, that we still when we work with a French company, we still work on getting a memorandum. We still work on preparing the offering so that it's clear enough. So maybe we don't go until all the expectation of the securities in France, but still we still consider that we are issuing what is in the States securities. And if as soon as this company is looking for getting investor from the US, we comply with the SEC. We comply with what are the restrictions there. And that's how we've been building. And right now, the US market for us is obviously big. European markets will probably require as well to get some discovery on all the jurisdiction. That's why I mean, what we are doing, we don't see it without without working with the regulators, the FCA, in the UK, the AMF in France, the SEC in the States. It seems obvious, but what I love in what Aaron is doing, for example, I think that we are building something that works right now and that fit in the regulation. When Aaron with Open Law and even the law, they are building what will be the next move, what will improve probably in the next 10 or 15 years, all this framework that we are discussing today. And to get back to the title of the panel today, we are talking with companies that exist now. They are looking for raising funds right now. So what solution do they have? And I think it's really cool when I see that DAOs now have this clear path of how it can work, how they can get funded. And we saw it with the DAO. We also saw it with another DAO called DXDAO. They called us 3 months ago. They requested to use all the smart contract from Fairmint that we put open source. That's what they did. They implemented it. So obviously they went to the Satoshi mode, like permissionless. We don't know who had deployed the contract, but still they are using all our mechanism to raise funds. And right now there is 6 or 5,000 ETH, so probably 1.4 or 5 million in less than 3 weeks. So that means that right now we see traction from all those early adopters getting their MetaMask accounts, able to manipulate crypto. So those people, they are the early adopter of a move. Like probably they were the early adopter in the ICO, and now they are working on DAOs, and DAOs are working on being probably reinventing the VC model, the investment DAO. And we can imagine that tomorrow they will also finance traditional companies. How I still don't know. It's probably hard to invest, maybe except with grant or very specific. Because who would own the portfolio? Who would own this equity if it's a DAO? That's lots of questions that are still without any answer. But it's moving, and since 2 years we keep seeing that all this ecosystem is moving pretty fast. Is getting more and more finance to get the money they need to dig and to work on getting better and more sustained. And I think that I think we need both type of workers, like the visionary, the futurists that are shaping what will be next, and also bridging that with the real world that are desperate for finding a way to get financing. I spent 10 years using factoring and debt to finance growth with companies that was sometimes hiring 30 people per month. And when you have to pay all the wages at the end of the month, you need cash. You need lots of cash, and that's how you finance your growth. And that's really key, because when you are a founder and you need the cash now, you don't wonder what can be the world in 10 years. No, you just need to know how you will get the money very fast. And crowdfunding was a hope a few years ago, but obviously it doesn't really work due to the adversarial selection that we see on all those platforms. In 2019, only 62 million was raised in the US through the Reg CF, which is like a very small check if you compare to some fundraising that are already over that from VCs. So yeah, I think this anything that will be done to allow more and more funders to get financing and to keep focusing and executing on their business without work on PowerPoint presentation, to spend then time, like Aaron said it, doing a roadshow to VCs to get some money. Well, anything that will be done in this way will be a super step.
So I'd like to play the devil's advocate here and talk in favor of regulators, regulation, lawyers. Because whether or not you go permissionless or you respect the legal frame, Joris, you are talking about the needs of the funders and the business, and cash is key indeed. But one has to take into account also the needs of investors. We've seen, especially during the ICO craze, that actually that might be also a reason for the demise of the ICOs. That a number of scams, so many scams actually, were leaving retail investors completely unable to recover any of what they invested in those shiny projects. And I'm super interested to understand better how new protections could be applied, or it could be gained by investors when they touch those weird instruments. And I understand that there could be some kind of crypto mechanism in order to protect the investors. But the more you make the instrument compatible with the legal and regulatory framework, the more you need as well to have some legal protections. So in the case of continuous securities for offering, for instance, so we understand that it's not equity, but it's a form of security. So what can be offered to the investor in order to make sure that the founder is not going to run away with the money that he has continuously raised for a number of years?
Well, first thing, as soon as you comply with the regulation, that means that you accept the idea that all the battery of laws around the securities are applicable to you. So if you are a founder right now and you try to play this game, you will have no doubt a class action, or you will have people that will use all these laws against you, and probably you will go to jail. So this is enough for most of the people to think that, okay, we don't play. As soon as we issue securities, we don't play. And in your communication, in how you work, and then you can also implement some kind of mechanism. That's what we did with the continuous securities offering. We create this reserve that serve as a last resort liquidity, that allows any investor to at any time at least try to liquidate his position with getting something. But still, the best protection for the investor right now are the law. And if you fit in the regulation, that means that you, as a founder, you accept the law, and that means as an investor, you know that you can get protected through this type of law. We don't try to create new protection. I don't know if it's clear enough. If it answers precisely, and I really mentioned the CSO, the continuous securities offering, because obviously if you do an ICO today.
Okay, thank you.
Maybe to adapt to the audience and to give more definitions of the different type of token. Thibaut or Joris or anyone, can you define the different kind of object in the token world, whether it's utility, whether it's security, whether it's something else, or what can you give an example of how it works and how it is different in terms of regulation?
Well, I can start if you want. There is now a classical distinction which was initiated in the first place by the Swiss regulator, FINMA, and it became very mainstream and adopted by many regulators, which is the distinction between 1, the utility token, 2, payment token, 3, security token. And so utility token is supposed to be in Europe, not regulated unless there is a specific regulation like in France. And but it must be a real utility token in Europe, meaning that it's there is nothing which is an underlying asset which looks like a real financial instrument like equity or debt. That's a utility token. And second is payment token. It's like payment token is like all the major cryptocurrencies that we all know, Bitcoin, Ethers, etc. And because they are supposed to be used mainly for payment, regardless of the nature of the activity of the product. Payment token. And the third category is security token, which doesn't necessarily, which is not necessarily defined the same way in the different countries. But that's the idea that it's asset backed. The idea it's asset backed token. It's not necessarily regulated by securities laws as such. There is a question of case by case assessment of what a security token really is. But those are the classical, and every time there are different regulations that apply or don't apply.
Regulation have all their own like interpretation of that, and for example, and in France, it's since the Loi Pacte was voted, for example, there is no utility in France. There is a security which fit with 4 or 5 criteria. I don't remember exactly the list. And if you are not in that, then you are a token point. And that's how it works with this regulator. You cross the sea, you cross the ocean, and you have a world that is completely different. So yes, it's pretty hard to just segment this way. What is for sure is that today, fundraising for a company, let's say a traditional company, so 95% of all the companies and funders that you know, they will raise through securities. And so the question for them is more like, how do we fit with the regulation to be sure that we can get our money, so that the investors are well protected, so that more and more people get access to this new type of cap table, and that's probably the main question that they are looking for answers.
Yeah, I think also thinking about fundraising, that's also, to go back to your first question, Benoit, is about the SAFG. It fits nicely with that. So a company would be able to raise capital through a traditional securities offering, or maybe even potentially one of these more novel approaches like continuous fundraising, like Joris described. But at the same time, that would be decoupled from the distribution of the token. The big area where I think lots of regulators got a bit perplexed was the fact that folks were selling tokens to fund the project. So it looked like a traditional venture capital deal. And then at the same time, they were distributing them and making them freely tradable to users. So arguments could be made on both sides that, well, this looks like an investment. This looks like something that would be a utility token. So pushing aside some of the differences, which lawyers like to geek out on, but that was the big concern, right? The regulators would see a token, they wouldn't know, okay, was this bought for investment purposes, or is this distributed and needed by the users for the platform? So where I think things are going, this is just my opinion, you're going to have a more traditional fundraising. Maybe that's through some of the stuff that Joris is working on, and hopefully that's the case. And then at some point in the future, when the project is ready, it's fully baked, it's ready to come out of the oven. Yeah. Everything's smelling fantastic. Everybody, is excited about it. At that point, you can see a token emerge, and then that can point towards this future of what I think lots of folks in the blockchain space have been wanting to build towards, which is having open source technology that has developers that have received some sort of compensation for their brilliance and genius and hard work and sacrifice. At the same time, you have a token that can be used to manage that ecosystem, which would be great so that it can remain long-term viable. And at the same time, there's no risk that this is for some sort of fly-by-night fraud, which is what I think was of major concern for most regulators. It wasn't the great projects that were doing ICOs, it was the ones that appeared to be done by folks that are perpetuating frauds or scams or other things like that. And that's not healthy for anybody. So I think that these two kind of worlds are getting untethered. And in terms of token taxonomy, it's a big issue. In Europe, obviously, as Thibault mentioned, some jurisdictions have created some really nice ordered list. Not surprising that that comes out of Switzerland, right? Like a nice clean ordered list. Singapore, also not surprising, nice ordered list in Singapore as to what they're going to classify things. America's a mess. We're not going to come up with a nice ordered list. That's way too much for us to wrap our heads around.
It gives us the opportunity to develop.
Yeah, just so we like to keep things a little bit looser here. So I would be surprised if we get a nice ordered list here. Although some folks in the blockchain ecosystem have advocated heavily to do that, and and I think on top of it, we've seen like new tokens, governance tokens, personal tokens. There's a whole host of other tokens that are emerging. So it's still moving pretty quickly despite the legal uncertainty.
Yeah.
But I think that in Europe, the situation will change eventually. And at some point, the European Commission will actually include tradable utility tokens into a definition of security. It will happen. There are ongoing discussions now at the European Commission, and for that, and actually it makes sense because if you are honest and looking at the ICOs when and this is more or less the position of the SEC, when you have a utility token where most people buy them only for investment purposes because the utility token is not available yet as a service, and this is an investment. That's common sense. It's common sense. It's an investment, and so the European Commission is clearly having more and more that approach towards utility tokens. If it is like miles that you buy for purchasing a future service, it's okay. But when you buy it, the only thing you can do is trade it. That's an investment.
Yeah, it's
makes sense.
It's tricky. I would say at least from the US, it's the secondary trading pieces are a little less of a concern from the regulatory perspective. There's plenty of commodities that have secondary markets, and I think nobody is willing to say that those markets involve the dealing of securities. I don't know if we're going to make that same move here. Maybe if there's a regime change that could change, but I would be surprised. The big concerns from the US perspective were the use of these proceeds for financing new companies. I think that irked Silicon Valley, that they may actually get decentralized. And so I think that they advocated heavily to maintain their position. And I think the second thing that disturbed people was just the fact that there was just a high level of fraud, and there's no way to get around that. Well, I think that there's a path, right? If you've got a decentralized network of some sort that folks are working on and supported, and they are not making overt promises and they're being delivered to users, that may be the answer. I think there's a lot of benefits to that. So
yeah,
I do not think we'll stop talking about the regulatory issues with security with tokens anytime soon. I think that is a truism. I imagine that the few people that will benefit from this will mostly be lawyers who will continue to extract fees from entrepreneurs to do this, which is a bit depressing. But I do think that fundamentally blockchain technology really does change the game for capital formation. I think that there's some core aspects of the internet that we've seen, right? One is kind of the democratization of media and all the goods and bads that go with that. And the second is e-commerce. When I look at blockchain technology, I really do think that kind of the e-commerce equivalent for blockchains is capital formation. I just think it's a 100x improvement over where we are today.
Totally.
Putting aside the law, like everybody effectively has an investment bank in their pocket where they gain access to these massive pools of capital that are only going to get bigger and bigger. And I hope that countries begin to embrace that, because I think most people are good. Not most people are not bad, and most people just want to, do a good job, make something to make the world a bit better, and hopefully be able to provide for their families. And I think that this is a great way for that to happen.
Totally agree on that. That's why I'm super proud and happy when I see DAOs that start to finance project I don't remember how many projects got financed with the DAO, but
two so far. Tornado Cash, which is a really great project. It's a privacy preserving project. So that's a whole separate issue about privacy and blockchains. There's not that much of it, so it's a tool that's trying to do that. And then an NFT marketplace, so another type of token that we didn't talk about. So like a representation of a piece of artwork called Super Rare. So those are the two projects that the community has funded so far.
But it's really cool to see that right now we allow much more people than before to access this type of investment. And we can imagine a world where tomorrow everyone can be his own LP. And we invest in these DAOs, the investment DAOs, and we simply decide once a week or whenever we are pinged on, hey, I want to invest in that. Yeah, I want to invest in that because I believe in it, because I love the mission statement. So that has to be super frictionless. And then all the tools that will exist behind are, as Aaron said it, the tech is here. We can do a lot today.
You can do some, yeah, I mean, Joris, just to riff on that, you can do some pretty incredible things. So there's, with the smart contracts, you have the ability to pool capital, but also pull capital really fast. So we can't do that today. So if you're investing in a fund, pretty much the fund manager locks up your money. So, and then that fund manager decides how that money is going to get deployed. Because we've basically turned capital into information, money can get pooled really fast and get pulled back really fast. So you can create structures using this in some of the smart contracts where people could basically pool their capital. They could leave with their capital at any point in time. They can also create subpools where nobody can basically take your money. You gain full agency of your capital, even though it's in a larger pool. So we just couldn't do that before. We just didn't have the technical capability to do that because everything was being done on paper, and it just was too hard to kind of effectuate it. But with blockchains, it comes kind of out of the box.
Yeah.
And the smart contracts that are needed to do that, they're out, right? They're getting battle tested. They're having millions of dollars in value passed through them. And I think that's when you kind of get these new, interesting, novel applications. You just can't do it in the traditional world. So I think we'll start to see a lot of experiments with that. I know the DAO Stack folks are also doing quite a bit there too, just in terms of governance and different ways around that.
We have some very quite basic questions from the audience about how we use the cryptos as a startup business. And I would add another question and another subject that we haven't talk about yet is how you involve the other stakeholders, like your employees or your client. Can you give them some cryptos? Can you pay your employee with some crypto and or partly with some cryptos? And what is the interest of doing so in terms of tax issues and regulation?
On the tax is really less specific to every country, so it's pretty hard to answer. On the use of crypto, well, today we have the stablecoin, which allow almost anyone to jump in crypto. Probably the bigger friction today is the fiat to crypto. So meaning like how you transfer your real money into this digital currency. That is where you need probably to use a money transmitter company, and that's probably where the biggest friction will be. But as soon as you start to work with stablecoin, for example USDC, well, what prevents you to start to pay people with USDC? Nothing. What prevents you to pay your partners, your providers in USDC? Nothing. It's just like, do they accept it? If not, well, you just have to do this conversion, and you pay with a normal dollar. What's missing today? We are lots of European here, so what's missing today is probably the euro stablecoin. So let's hope that Tezos will finally work on that, because they clearly have a play with this idea of a euro stablecoin. But still, Mostly you can use the stablecoin to receive your money, transfer your money, use it in the real world. Everything is doable with the stablecoin.
Yeah, I'll give the US on the tax question. Crypto is treated like property. So whatever you buy it for and whatever you sell it for, you pay the difference. You pay a tax on it depending on how long you hold it. I think in certain jurisdictions like Switzerland, crypto to crypto transactions are not taxed, which is a huge advantage. So there's some tax arbitrage issue. In terms of what folks do, teams tend to reserve for themselves and their employees some allocation of a token if they're going to go down that path. What that range is from 10% up to 20 to 30%. And usually that's set aside as compensation for the founders and also for key workers, et cetera. So that looks a lot like equity in a sense. And what companies do, at least US venture style startups, where they'll set aside an option pool for key workers and or provide restricted stock to key early employees. So it's all feasible. The regulatory issues around allocating out tokens, depending on whether or not they're securities or not, are a little less of a concern, at least under US law. If workers are working for your company or you've developed a long-standing relationship with them, there's certain exemptions that just kind of avoid all this mess that we were talking about before, if you follow them closely.
Yeah, we can reproduce what exists in the real life with equity on the token. So all this stock option pool, you can definitely reuse it pretty easily. The question is more like how can you also do the same for all the rest of the people around you? How do you incentivize your freelancer? How do you incentivize all those people that are completely out of the stock option pool today? And that's probably where crypto also has a big play, because we can really consider that any stakeholders matter as soon as we do this move. And most of the funders that are currently raising funds through this type of mechanism, most of the time it's like it's founder with conviction. They are willing to be part of this stakeholder-centric capitalism. They are willing to push as an early adopter this new type of tech, even if it means taking some risk on the regulatory framework. And that's probably all those people that are pushing today to a better world tomorrow. So, and lots of them are around in this panel.
So if you give money, if you give cryptos to your freelancers or to your employees, will it be considered as something like a salary, a wage, or will it be considered like something? If you give it, is there any issue? Is there any risk that they will ask you for the money instead of the cryptos that you give them as part of their wage?
Well, it will depend on how liquid what you are giving them is. Is it liquid or not? If it's not liquid, well, it's like stock option. If it starts to be liquid, which is normally one of the characteristic of the tokens, then it makes tremendous sense for them. And as an employer, you will anyway need to comply with your own regulation on this side as well, all the social regulation, and probably. I mean, that's what we are doing it also. We just comply. It fits in all those specific plan for people that have a link with your company. So yeah, it's doable.
I would say it's probably easier with and I'm sure Thibault can probably weigh in here, but at least in the US, it's going to come up to the agreement that you have, right? So if Jor has hired me as an employee and we both agreed that I would be paid in crypto, that's fine. What that would mean in terms of the tax implications would probably be the trickiest aspect, right? Because I'm basically transferring that with some value. And the question is who's going to have to pay some of the related taxes. how does that get accounted for? But look, like I also think, you know, practically lots of projects have done this. They just kind of hold their nose on some of these tax questions and feel like they'll sort it out later. So lots of projects for a long time have paid their employees either in token or some sort of native asset. And for the projects that have done tremendously well, it's been a win-win for everybody. So
I will have to.
Under French law, if you pay your employees or your advisors in tokens, and under French law, but I guess it's going to be the same treatment in many countries, is going to be seen as a payment in kind, and so and subject to taxation. And for instance, if you're an advisor and that you receive tokens in payment of your services, it's a professional remuneration. So you need to pay VAT, unless VAT doesn't apply according to VAT rules. And if you are an employee, the social taxes must be applied to your payment in kind, and which is of course very tricky, because you need to pay then something to the state that will never accept to be paid in tokens. And that's today the problem of the token economy. That every time you must pay a tax based on your token payment, it's not in token that you pay, it's in fiat. And that's a problem of many projects today using tokens.
that's a good point. Yeah, the tax issues, until those are sorted out, will, and I have a feeling they will not be sorted out, just because it's a great point of control by the centralized government. But I think that's a really great point, people.
Let's wait for all the tax regulator to have their own wallet to send it to us.
Yes, I mean, so we did a proof of concept around this with OpenLaw, but we didn't. It's a little bit relevant here. We did an employee offer letter, so there was a legal agreement. People got paid in a stable coin every minute, so you could watch your bank account click up, and then we modeled out the U.S. tax code so the government could collect taxes in real time.